delay diversification. Just want to start out with something personal. Thank those viewers that are out there that have given some feedback and asked questions. This is me with my best version of my silver fox with my silver hair. With my son, my eldest son Joshua just had his wedding this past weekend. We're very excited for him. And it's one of the reasons why I'm all about sound money is posterity, family, and preservation, and just teaching people to be good stewards. So this is one of my motivators for doing this podcast. So for this week, I'm just going to go through a few slides just to bring to remembrance, don't delay diversification. We saw in the last 10 days the highest price in silver historically, went over $2,100. That was over the weekend when the bullion banks are not trading the paper. The paper trades manage the spot price to a large degree. So when that is not happening, which typically is when U.S. business is closed, those prices can spike, which I have went over in prior episodes. And that's what happened. And then abruptly on Monday and Tuesday, obviously there was some trading to happen to push the price back down and manage it. We also had a nice bump on a few days following that where silver punched over 25. A lot of people that follow the industry are watching for it to punch past 26. If that happens, we think there's going to be a large candlestick movement up. So anyway, things to watch for. But I'm just going to go through some information on leading indicators, just the space, why diversify. Again, this is a very reasonable approach. Just trying to share information. It causes people to think about why should I have 2 to 10% of my net worth in metals. And this slide illustrates how small the gold market is from a valuation standpoint compared to other markets. I won't go through each one of these, but obviously the biggest market there, over-the-counter derivatives, is basically just paper trading. It's not even real stuff. There are markets on top of markets. And in my very first episode of the Money Flower, we kind of discussed that. And that's why this is a good illustration of the fulcrum point there of why some of these things don't make a lot of sense. And when deflation hits or markets come under stress, the money is going to start to move to the gold. And so you want to be positioned there before the valuation starts to increase, because you'll miss the opportunity. And again, not to approach it like a big bet or try to increase money, but it's a way to preserve in case other types of assets, etc., deflate. Most likely gold will inflate, thereby protecting you against that. And that's what diversification is all about. This one, I often complain that, Americans, I mean, we see the Indians, the Chinese, the Russians, we see lots of people where the citizens are investing in the metal. They understand that. And in the US, it's just not the case. And it all starts with kind of the leadership. Leadership in this case is financial advisors. And this is just a good chart that shows why would we expect to see anything different if the financial advisors aren't really following their fiduciary templates on guidelines, which again is 2 to 10% of your wealth in metals. If they're not really pushing that or helping people to understand that, then we're not going to see an adoption rate among the citizenry. And that's one of the reasons why I'm doing this, is to educate both high net worth individuals, just your regular family homes, and just all the way again from high net worth individuals just down to somebody that's in a widow, for example, in retirement, and they need to be diversified as well. So it just covers the whole gamut. So I'm just trying to address as broadly a group as possible. This is a very complex slide. I understand that, and I just want to make it really simple. This is over a 12-year period, and this is just what we call a cup and handle. And these kinds of technical things happen in markets all the time, and it's happening in the gold market. And you're able, from a technical analysis standpoint, assign probabilities. So right now, we just saw last week, and we saw that we punched above this $2,100 price on gold. And so, there's people out there, again, you can see the probabilities: unlikely, very unlikely, extremely unlikely. I mean, you can't say with total certainty that it's not possible the price would go down. but just based on everything that's going on in the markets, the likelihood is for it to continue to increase. And again, that's why you want to diversify. You don't want to bet on it, but you want to have a reasonable amount, a portion there to manage your risk. This is a leading indicator I've talked about in past episodes. It just kind of continues that story. I've talked about how medical properties with the MPW ticker symbol is crushed over the last 18 months. The valuations because of those properties having to turn their debt. And now we're starting to see it in commercial real estate. Banks are fighting it and holding on to the assets, and they're not doing the revaluations on their books yet. In part because the Fed started in February of 23, BTBS, which is basically a repo where the banks can go borrow money at very, very low rates to help infuse and cover things. But that is set to expire this upcoming February in 2024. So it'll be interesting to watch that. But regardless, we're already seeing from a valuation standpoint, those valuations on those properties start to come down. And so we'll continue to watch this. This is a leading indicator. Again, it'll roll from commercial real estate into residential real estate. This is one thing I just wanted to point out. I got this off Focus 2030. So if you follow the United Nations or World Economic Forum or Fourth Turning, any of those kinds of concepts, the Great Reset, in some groups talk about the Great Awakening. These are all kind of similar notions with different degrees and takes on what is going to happen. And, you and I, or I can predict exactly what's going to happen, but it's very interesting. These folks are calculating, 7 years till 2030, where they want to have their whole program baked in. And the reason I mention this is because these are the very same people that manage the BIS or manage the central bank system. And I want to point out something that I brought up in prior episodes, which is the central banks all made 4 years ago gold a tier 1 asset, and they've been loading up on it. And I've showed that in other videos as well. So they're preparing for something. So again, this is just my invitation to everybody. If they're preparing for something, you probably should be too. I thought this was pretty telling from a stock standpoint. Bubbles, if you were in the market when Greenspan was the Fed chairman, he talked about irrational exuberance. This is just illustrates how the market went up over 11 years straight with a new high from 1989 to 2000. And we just saw the same pattern here. And what happened after 2000? We saw a market collapse. And, I know everybody's saying soft landing and the market's looking good, but basically there's 7 to 10 stocks carrying the day there, and underlying all that, which the mainstream media does not talk about, is interest rates already going down because the bond market is not managed by the Fed. The Fed is going to be following the bond market. The bond market rates are already coming down. The Fed is going to have to try to play like they're ahead of that and start decreasing rates. Literally, they've had a sharp pivot in the last 2 months just in the way they talk about things, where they're saying higher for longer, forever. And now all of a sudden they're talking about 3 rate cuts in 2024. Here's just another leading indicator I want to touch on real quick is median sales prices are starting to decrease. You may not see the values in your neighborhood necessarily decreasing yet, but buyers are buying properties that are lower cost on average. And so that's what this is saying, that buyers are looking for better deals or less square feet or smaller properties. The median sales price is going down, and that's a leading indicator. And we'll go in eventually to other things that we've talked about in other episodes. Okay, well, that is it. I appreciate the time. Again, I'm trying to keep these short but informative, and just kind of keep sharing data points that help people kind of make the decision. Yeah, there's a few data points that Justin shared here or there, and it makes a lot of sense. And again, I don't need to bet the farm, but I should do something to just help diversify my portfolio. All right. And again, this is for informational purposes only. Please like, subscribe, and share with those that you love. Thank you.